Hello and welcome to another edition of Business 7 in the program and the publication where we look at issues in the Namibian economic and financial landscape in a little bit more depth. Now, this week we are joined by two guests in the studio. Firstly, we're going to have Johan Nel. He is the corporate tax leader at PwC Namibia, and he's going to share PwC Namibia's expectations around the upcoming budget. Now, all indications are that Finance Minister Ipumbishimi will be tabling the 2021-22 national budget in Parliament next Wednesday. That is the 17th of March. Later in the program, we talk investment, and our guest in the studio is Trevor Ndjadila. He's the Business Development Manager at Alexander Forbes Investments Namibia, and he's going to talk about market volatility, how you should be looking at your investments. Please don't panic. Market volatility, the past year's movements, quite normal, he says, and the important thing is to keep your eyes on the prize. Now, turning to the front page story on Business 7 today, we're looking at non-performing loans on mortgage loans at commercial banks in the country, and not a pretty picture at all. Of course, it is not just due to COVID, although, of course, last year consumers' capability to be able to service those loans were hit tremendously due to the COVID impact, lockdowns, lower salaries, people lost their jobs, etc. But we know that Namibia has had a hard time economically since 2016, and just one of the very, very interesting stats that show the extent of the past 4 or 5 years economic recession on the consumer is that by 2016, at the end of 2016, the total value of mortgage loans that were outstanding for a year or longer were about 460 million Namibian dollars. Now, by the end of September last year, that is the latest stats we have, at the end of the third quarter last year, the value of total mortgage loans that were outstanding for 12 months or longer already stood at 2.5 billion Namibian dollars. But read all about that in Business 7. Of course, you can find the entire publication in today's Republikein, Algemene Zeitung, or the Namibian Sun, or you can read the stories online. We'll be back in a bit. Eyes are on the Finance Minister next week when he's expected to table this year's national budget. To talk about the expectations of the new budget, we have Johan Nel. He is the Corporate Tax Manager of PwC Namibia. Johan, welcome and thank you for your time.
Thank you, Jo Marie.
To start off the conversation, against what background is this budget taking place?
I think, not to state the obvious, but a very difficult background. Yes. I think everybody realizes that it's a difficult time, there's uncertainty in the markets, and we think the Minister of Finance got a very tough job. But every year we say he's got a tough job, and then every year we still do make it. So I think against the backdrop, during his mid-year budget speech, he did indicate that we want to try and refuel the economy to a pre-COVID trajectory. I think it's optimistic to think that that will happen in this year or in the next 2 or 3 years. I think we have to take a long-term view and see what's going to happen. Of course, everything that's top of mind is things like vaccines and PPE and all of that. So I do expect something of that to come through strongly during the budget, but also maybe some incentives for the taxpayers that will fuel foreign direct investment, because that's ultimately what we need in order to grow the economy.
Exactly, that's the driver. What do you think will be the most important issues in the budget speech in particular?
So I think, as I mentioned just now, things like, do we budget enough for the vaccines? Everybody now wants to know, when are we getting the vaccines? What will it cost? Is there enough money in the budget for that? So definitely something on that. And of course, what we will spend on healthcare, I think that will be one of the important things. But I really want to see something that, as he mentioned, we want to refuel the economy. So what is there for foreign investors? What is there in terms of policies that's coming through to make it more prone to investment into Namibia? So I really hope that something like that is in the budget speech.
Yes, very much, especially on the policy issue. We've spoken about that on this program, particularly how desperately we need policy certainty going forward so that we can get the foreign investors or investment per se to drive economic growth on a sustainable basis. We have seen this in the budgets since 2016, government embarking on a consolidation, trying to get back macroeconomic and fiscal stability. So the minister doesn't really have a lot of space to maneuver in terms of spending. We have a massive debt problem. So is there light at the end of the revenue tunnel? Do you expect a big announcement when it comes to revenue?
I don't think revenue can jump too much. I think it would be over-optimistic if we see a big increase in revenue. I'm expecting, if there's anything, maybe a slight increase, and that will be at the back of things like NAMRA coming in, which they believe will increase revenue collection. I won't put my money on it too much that it will happen in the first year. Things like the tax incentive program that's currently running does force certain taxpayers to make use of the relief, and therefore there will be increase in collection. But if you look at the amount of jobs that have been lost, the profits of companies that have decreased as a result of COVID, there is just not money to pay tax on as there was previously. So an increase in revenue would be, for me, very optimistic, and I would be quite surprised if there's anything about a massive I got to mention SACU.
Yes.
With the global trade
under pressure.
In a lockdown, the SACU pool will probably also not be that significant as it was in the past.
A quick fix for revenue, of course, is to introduce some taxes. What do you or PwC expect on the
It would be quite brave to further cripple people during this time with increased tax rates. I think the tendency is across the world is to either reduce tax rate or to give more incentives. So to increase tax rate at this stage, I don't think is going to work. We don't expect anything to increase. So yes, definitely no new taxes.
If you say no increases in taxes, obviously also no decreases in taxes.
I would be surprised. Whenever there's a decrease in taxes, the view is that, okay, so where do we get the money then? And with increased spending to stimulate the economy, where does this revenue come from? So there's a fine balance between reducing tax rates, generating more revenue, all of that. I think if we look at efficiencies, and hopefully NAMRA brings that to us, there's a lot of opportunities to collect taxes in the Namibian market. There is unfortunately still a lot of non-compliance, and if efficiently administering taxes and being open to where we can collect taxes is definitely there. We just need to enforce it. Things like transfer pricing, we've been crying that for, it's now 15 years almost. It's something that's there to be collected, but nobody's actively driving it and taking taxpayers and saying, listen, you owe us 100, 200, 300 million, because that's easily what it can amount to.
That can certainly help, can certainly help the fiscus there. O, jette, ek het nou my vraag vergeet natuurlik. O ja, ek is by jou. Okay. Ons vat gou 'n slukkie water ook. Okay, Matt, so you'll just cut there and then we carry on now. Can I just carry on? Yes. Okay. Usually in a budget speech, we see the minister touching on tax policy or tax announcements. We've seen that over the last couple of years. Do you expect that some of the announcements that have been made in the past couple of budgets, that there might be more certainty around the implementation of those?
I think we definitely need an update on where we stand with previously pronounced tax amendments. We definitely do need some clarity on, is it going through, are we scrapping it, what's the status? So when the new minister came in, the view that was taken is that he's going to evaluate all of this and see if it's still, what is the impact on business, and will it give the revenue that we really need? So I don't think at this stage new taxes and things that will come in. One of the things that's been there for quite some time is the increase in the threshold for your contributions to pension, provident and retirement annuity funds. So that would be a welcome amendment that will hopefully not cost the fiscus too much, but it does give the taxpayer some advantage.
Exactly, some incentivification, yes.
Maybe something as well on the removing the zero rating of VAT on sugar.
Yes.
Is something that's probably also coming
in. One is inclined to say that every year, especially in the last few years with Namibia being stuck in negative growth or very, very low growth. But to which extent is this year's budget a make or break budget?
I think every year we think it's a make or break.
Exactly.
I don't think if we get it wrong this year, it will be complete break. I think in terms of debt levels, we are far beyond where we should be. But we are not the only people that are there. Yeah. So globally, the trend is that everybody's under pressure with increased debt. So hopefully there's some leeway to maneuver that. I think we have to be very careful in the spending, of course. On the revenue side, more efficiency can help us. But then to apply your mind in terms of the budget and say, what is it that's really necessary and what is it that is a nice to have? And that's the way business also does it, is everybody this year should start from what we call a zero-based budget. If you spend something in the past, it doesn't mean you're going to spend it this year. Is it really necessary, or is it a different way of doing it? And I think that's the challenge that the minister has now, to see what is really necessary and what is nice to have.
Johan, thank you very much for your insights there. And yes, PwC Namibia, of course, also very eager to look at the budget. And you will be on standby for NMH to give your insights, to share your insights on the day of the budget. All indications are that it will be next Wednesday. So thank you very much.
Thank you.
In every edition of Business 7, we have an infographic where you can get facts on a certain sector at your fingertips. Now this week, we're looking at 3 decades of mining in Namibia. We all know that mining has traditionally been a pillar of the Namibian economy, and we're breaking it down for you since 1990. You can have a look at exactly how important the diamond industry was, uranium, the increasing importance of your metal ores, particularly gold, and also the role the mining sector has played when it comes to employing Namibians. So have a look at that. We'll also be publishing that infographic online a couple of times during the next 2 weeks, focusing your attention on specific issues in the infographic. Just after this, we are back with Trevor Ndjadila. He is the Business Development Manager at Alexander Forbes Investments Namibia, and he's going to talk about investments. Welcome back, and we're joined in the studio by Trevor Ndjadila. He's the Business Development Manager at Alexander Forbes Investment Namibia. Hello, Trevor, and thank you for joining us.
Good morning. Thank you for having me.
Trevor, in a nutshell, give us an idea of what happened to the markets last year and why did it happen?
Okay. Last year brought a close to a year where a global pandemic affected all our lives, and one we are still trying to navigate into 2021. The rollout of vaccines globally has given some light at the end of a very difficult time, but the reality is that we are still not at the end of the crisis, and we continue to feel its ongoing impact. The fourth quarter of last year saw a continuation of the strong rebound that we experienced for most of the year, following the sharp sell-off we saw in the first quarter. The strong performance of asset classes in 2020 does not reflect the uncertainty and weakness of the macroeconomic environment, and is something that we are very focused on. The reality is the major driver behind the strong performance has been the unprecedented global stimulus to support economies in a time of crisis rather than a return of normal growth.
As is very often said, if the rest of the world sneezes, then Namibia gets a cold. So obviously, we were also impacted by the market volatility last year. To which extent was Namibia impacted?
In terms of Namibia, if we first look at just the equity market or asset classes, Namibian equity struggled with a negative 1.8%. However, Namibian cash performed close to 6%, provided positive real return in a subdued inflation environment where Namibia inflation came in at 2.2% for the year. And lastly, but not least, Namibian bond returns were also quite very well or performed excellent, shrugging off sovereign ratings, stretched liquidity concern, and a precarious fiscal situation to finish the year with a return of 4.4%. While returns were positive for the year, this came with a large degree of volatility. The purposeful diversification, this is now looking at our portfolios, ensured risk was controlled despite the uncertainty, reducing the volatility of portfolio returns when compared to the overall market volatility. In addition to reducing risk, the diversification also ensured exposure to a wide different class of investments, allowing for a diverse set of return opportunities for the portfolios to capture in the year. From a performance perspective, most of our portfolios have navigated the environment well and have outperformed their respective benchmarks.
Trevor, looking at 2021 and going forward, what can we expect from the markets, and what is your advice to people investing and getting scared when all this volatility is ongoing?
Okay, your first part, I would basically say the recovery is dependent on a widespread of effective vaccine rollout. I think that's number one for the country or the world as a whole. Notably, the last quarter data releases were by and large encouraging, with a significant rebound in real GDP as lockdown restrictions were lifted to allow for increased economic activity. Going forward, we expect the economy to return to a moderate recovery of 2.6% in 2021 before increasing at about 3% in 2022. The recovery is likely to be supported by the traction gained in some of our productive SOEs, especially NAM Power and NAM Water, with investment projects already in the pipeline, which aim to ensure efficient provision of energy and water across the country. However, the wholesale and retail trade sectors, which contribute to about 10% of total GDP, are likely to remain subdued given the high unemployment rate and cautious consumer spending. In terms of just looking at the message to people who are worried about the knockoff effect they've suffered in 2020. As with any typical journey, where we may experience both smooth and bumpy periods, the investment journey is no different. Clients are reminded of the importance of remaining invested through the short-term noise and volatility. Staying committed to your long-term goals is critical. The market is a scary place, but long-term investors shouldn't panic.
That's very sound advice. Thank you very much for sharing your insights with us. That is Trevor Ndjadila. He is the Business Development Manager at Alexander Forbes Investments Namibia. Thank you and goodbye.
If you're feeling how I'm feeling and you know I won't stop, all we gotta do is take our love to the top. If I got it and you want it and you'll never let it drop, all we gotta do is take our love to the top. I will ride for you, maybe even die for you. When I'm loving you, but my heart don't stop.
Thank you for joining us in the Business 7 studio tonight. We will be back in 2 weeks' time. Until then, stay safe.